Hey everyone, welcome to today's study trader video. One of the rituals that I have incorporated into my trading at this point I think about 15 years ago is a weekly and monthly chart review. So at the end of every week, usually I do on Sunday afternoon, I run through all the weekly charts, and at the end of every quarter, at the end of every month, and certainly at the end of every quarter, I also review the monthly charts. And so, as you guys know, if you've been watching this video for longer than just a week or two, you know I'm all about gaining perspective, because unless we have perspective from a trading angle, we usually are just kind of randomly dangling around the market. And that's one of the worst things. So we need to have perspective in different time frames in order to know that we're, not fighting the market, or maybe if we are fighting the market, we need to change that. So one of the charts I'm looking at right now, start off a new month of July, and a new quarter, which is the third quarter for 2018 already, is the chart of the broker-dealer stocks. So these are names like Goldman Sachs and Morgan Stanley. And what I'm going to show you here is how we look at this and what the perspective is, because there's not always just one answer, but there's always perspective within different answers to then make sure that we over time find a better answer, if that makes sense. Anyway, let me show you the chart. So this is called the XBD. It's the broker-dealer index. And on this monthly chart, which spans all the way back to 2002, as you can see down here, you can also see that the chart essentially right now is one where the trading action of the month of June has basically given us a retest of that breakout level. Now, there's always multiple ways of looking at this. So, the bulls would argue, well, this is probably a bullish sign because what used to be resistance, maybe that's not going to become support. And certainly I want to respect that opinion. However, if I zoom in a little bit closer into this chart and look at these monthly candles, okay, let me zoom in a little bit more so you guys can see these nice and bright. You can also see that with the trading action of last month, so the month of June, we closed right at the very low end of that monthly bar. And if you look at it through the lens of just purely candlestick, what you can see is that we've had buyer exhaustion here, buyer exhaustion here. In other words, buyers impotent to be able to push the market higher, failing to do so, buyer exhaustion in May. And obviously buyer exhaustion with follow-through selling. Buyer exhaustion with follow-through selling in the month of June. If we take all of that within context, I would argue that this probably is a better spot to call for selling into the rallies as opposed to buying the dips until we get a change of posture. Because right now, again, what we're seeing, let me just recap this. We've had buyers trying to push it higher in, let's see if I can go this back, May, April. So March, April, May, and then finally in June we get the follow through selling. To me, it shows embedded weakness. So these are, within this space, there's stocks like Goldman Sachs and Morgan Stanley. And to me, these are the kind of stocks that probably now are better to be sold on bounces. Of course, now we get to the weekly chart, right? So we look at this on a weekly chart now. And you can see, again, the same thing. We're just right back to support. So if we now dig a little bit deeper and go at a stock like Morgan Stanley, again, which is part of this broker-dealer segment, you can see here that this particular stock is potentially, has plenty further to go, maybe into the low 40s, because there's really not a whole lot of support here. Maybe there's some support here, but there's really no reason right now to buy it, right? There's no bullish reversal or anything like that. So given what's happening on the monthly chart, on the XBD, we have to go with what I would consider to be the path of least resistance, which is to say that right now, any bounces in these names, okay, and if you want to be very, very quick, you can buy the bounces, but ultimately, I would expect that given what's happening on the monthly chart, we should ultimately see more room to the downside. Now, understand this is a monthly chart, which means this is not an immediate gratification trade. This is not a trade that we're looking to day trade, not a trade we're looking at for 2 days. It's a monthly chart. That's like 4 weeks, right? So I would expect at a lens of 1 to 2 months or so that we could see potentially more downside in something like the XBD, which again is the broker-dealer stocks, purely based on the sentiment analysis, we just did it through the lens of candlesticks on the bigger picture time frame. So if you're going to buy those broker-dealer names from a trading perspective, better be quick, right? Maybe then sell into the rallies and go back short those stocks. If we get a major change in posture on a weekly chart, like a huge bullish reversal with another follow-through buying the next week, then that thesis could potentially change. But for right now, given the monthly chart, this is kind of where we are. So I hope this makes sense, folks. Have a good week. It's a holiday shortened week, and I'll talk to you guys tomorrow. Take care.